forward to having your input towards the report so that we can farm it and ensure its efficacy in the Kenyan tax system. So without further ado, I take this opportunity to welcome our national coordinator, Irene Otieno, to give her remarks, and then we shall invite Dr. Elder to present the report to us. So a round of applause as Irene comes.
The corporate taxpayer have, we work around building the capacity of citizens then to hold that government to account, to ask critical questions. And so a lot of our work centers around looking at the Auditor General reports, the Control of Budget report, the Parliamentary Accounts report, and generally oversight reports to look at how taxpayers' money is applied. So for the longest time, NTA has really been looking at the expenditure part of the budget. However, after discussions with our friends, we have rightfully been told that what we are losing in corruption and what NTA has been focusing on is a small part of what the country and Africa in general is losing. We understand that Africa and Kenya itself loses a lot in illicit financial flows, loses a lot in commercial transactions that are not corrupt but are informed by businesses planning. So tax planning, what we would call tax avoidance and not tax evasion. So we have then tried to balance this conversation. How does NTA add its voice on the revenue side of the budget, in as much as we are not dropping our interest and oversight over the expenditure part? And it's for that reason that our interest really as NTA was drawn to the tax expenditure report that was authored by Treasury for the first time. I think colleagues here might correct me if there has been one before, but we as an institution have just interacted with one that was, I think, put out last year. So this document quantifies and looks at what we have been speaking about as civil society players. I also stand here as a member of Tax Justice Network Africa, an institution that has built capacity of CSOs, and NTA included, around looking at the landscape, taxing landscape, not just within Kenya, but regionally and internationally. And I think that has really sharpened and been able to have us as an institution looking at areas that we previously had no expertise, and we were not able to speak to these issues. So when we look at this tax expenditure report, it comes at a time and addresses the concerns of civil society players, where we have said there seems to be a lot of focus being given to the corporate person, particularly the multinationals and investors that are investing in the country, and the same support is not as clearly defined for the smaller business entities and the Kenyan business entities. So we have been making demands and calls, or rather, let me not call them demands, but requests to government to give us more data to be able to address the assumption, because we have said, and over the years, I think government through our treasury, different authors, World Bank themselves, have been saying that we need to attract foreign direct investments. Our government and other governments and other players have said the way to do it is either give those tax holidays, give preferential treatment, certain preferential treatment to different businesses for a specific policy objective. So that is what has been happening. However, our question then has been, have we quantified whether this assumption has been holding? So there's an assumption that it will attract foreign direct investment. But do we have sufficient data? And as a country, do we even collect and have capacity to collect that data that can be able then to measure the impact of this preferential treatment that we've given some entities? So I would say and must commend Treasury for coming out with this document. It's a good attempt to then quantify and address some of these issues that have been coming up. The reason, again, we are very interested in this conversation is we all remember against the backdrop of COVID-19, where government now gave the pay-as-you-earn employees reduced pay-as-you-earn rate. The corporates also got a reduced pay-as-you-earn. VAT, we also got a reduced rate. And all this was kind of to be able to have citizens bounce back, businesses and households to bounce back. But remember that as taxpayers, we were excited. We were hoping that that would stay for long, but it didn't stay for long. Government quickly came back. I think it was Kenya Revenue Authority that issued a statement. I'm not sure who it is. I am seeing the representative not fully agreeing with me. But there was a response to say we are losing a bit of revenue and it's not sustainable then to continue with those rates. So we've seen that when you're looking at this, I would say smaller, respectfully, players, government has been very sensitive at how long, and you know, they were very easy to quantify. It was quite easy for them to quantify and say, while we had these reduced rates, this is how much Kenya lost in terms of revenue. So we're also hoping that that quick response in terms of monitoring how much we are losing through tax expenditures or how much benefit, it might not be what we are losing. We are trying to look at, I think for our research, it's open. You know, you can go into a research and find findings that you had not thought about. And so we are happy as civil societies to start having this discourse that what is the data speaking to when we measure what we are losing, or is it actually what we are gaining from these policy options. However, when we looked at the report from Treasury, we had a bit of concerns, and it is for that reason that we said, let us ask a seasoned consultant to be able to help us understand and to see whether our fears as civil society was informed or is very misinformed. A key concern was government pointing out that VAT, the VAT head is a big driver of the tax expenditure. So our fear then was, does this mean that as an action based on what government has shared, it will be then to reduce, you know, strategies, or rather to reduce the places where they've been given these exemptions and zero rating from VAT. And this is the area where civil society has been advocating and saying, for poorer households, for a tax head that we think, in our opinion, is not as progressive but is a bit regressive, and now here you are, you know, saying we want to remove the limited offers we've been having from that. So that was our main fear when we looked at that report. That does it mean now that government now will reduce these exemptions that we've been pushing for? Our reading also of that report, it was very silent on issues around gender and how, you know, taxes and gender, how sensitive or how are these linked? And we were requesting that this would be more pronounced. Our call again, even as I just want to sit and move it to the consultant first, is we know that these issues that the tax expenditure report is bringing out are not entirely new. There are some issues that government has known for long. We keep saying that the economic and the special economic zones create employment, but some civil society players have been asking, what is the quality of the employment that is being offered in those places? When you look at flower farms, you look at some of the companies there, and you hear the stories from the women there who work there. And you look at labor relations, issues that seem to be going against our Employment Act. Are we just looking at numbers in terms of revenue that we are bringing in, or are we looking at other indicators, even as we look at the type of investment that we are attracting? So our take then is how ready is Parliament and our oversight institutions to address some of the things that would be coming from the tax expenditure report authored by Treasury, and even some of the research like the one that NTA is coming out with. We know that this is a fairly political, it's just not an economic conversation where we'll be looking at revenues and the likes. We know there's a lot of lobbying, there's a lot of political will that is needed for government to say, what we are losing what we are losing is a lot. We need to take a stand as government. And so my hope is that over and above data that will be shared by the consultant, that this will also be matched by the political will to be able to stand as an African country and say, what we are losing in terms of illicit financial flows from tax planning and issues like that raised within our report and raised also from the Treasury report will be addressed. So I just want to leave it there. And to say, I'm hoping that all of us will be very keen to listen to what the consultant is saying, and more importantly, to point us out to areas where you think we need to focus on, even as we are thinking of 2023, to be able to advocate more for the taxpayers in Kenya. So asanteni sana.
To start us off, let's try to ask ourselves, what do we understand by a tax expenditure? We all know that every government world over finances their goods and services that's public goods and services provision, through the revenue that is collected. And every revenue that is collected is through a system, that's the tax system. But it occurs that as that happens, there are some exemptions or exclusions or waivers that governments put in place. And this is what constitutes a tax expenditure, because that money could have been collected if the system was implemented. That's the tax system as it is. But because we have to take care of some provisions in the public provisions, such as improving maybe access to goods and services by some target groups, in most cases the most vulnerable, or if there is need to expand employment or increase savings, then some provisions are given, and that's what we refer to as the exemption. These tax incentives constitute a subset of tax expenditures, and basically they aim at attracting or retaining investments, and they have social goals, that is cushioning households, particularly those with low income segment, and also from excessive tax burden, for instance. And we've experienced this in the recent past because, for instance, when we had cushioning for households, there was a reduction on the rate of tax for some targeted commodities. The report therefore adopts the National Treasury General concept of definition of tax expenditure, that a tax expenditure is a provision which provides preferential tax treatment to one group of taxpayers over another group of taxpayers, and that a tax expenditure is a provision contained in a tax registration or agreement that is directly substitutable for a spending program. The aim is to encourage savings, relieve tax burden on the poor or vulnerable groups, induce investment, and also enhance even exports. The study aims to inform fiscal policy by providing an analysis on tax expenditure in Kenya, and also to describe the role and the key economic features of tax expenditures. The study goes further to compile the list of tax expenditures and gives some indication of the benefit of taxes, as well as giving recommendations. The period covered is 2017 to 2020, and the method used is trend analysis using available data on tax expenditures in the country. First, the sources of tax expenditures, as I've indicated, they include tax holidays, credits, and offsets, which represent amount that can be deducted from a tax liability, refunds, which serve to compensate taxpayers financially, rate reliefs, and tax deferrals. From this table, we have the tax system as we know it. The broad tax provisions relate to personal income tax, corporate income tax, and value-added tax, import duties, and excise duties. From this list, it's evident that the tax expenditures that arise from deviations. For instance, for the tax exemption and waivers and allowances, we have under the personal income tax examples of relief to taxpayers. For corporate income tax, we have an example of mining deduction, for instance. And for VAT, we have exemptions and zero rating. And all these waivers amount to a tax expenditure that the country has to experience. In particular, under personal income tax, we also have mortgage relief, insurance relief, or ownership savings, exemption income. For corporate income tax, we have, in addition, plant and machinery investment deductions, building investment deductions, we NTA allowances, farm work and agricultural deductions. For VAT, we have zero rating. And also for import tax, we have like duty exemptions, particularly like if you are importing maybe a product that is targeted for a group like persons with disabilities, then that is also exempted. Over time, we compute the incidence of tax expenditures, and this has been reducing since 2017 from 5.2% to around 3.2%, but on average, the tax expenditure for Kenya as a percentage of GDP is estimated at around 4.2%. The tax system also gives an indication of the key drivers. Some of these relate to emergencies, for instance, like we've just come out of COVID, and after the emergency, there were exemptions that were given and also waivers, which contributed at that given point in time to the level of exemption that we were able to have. This chart here gives us an analysis of the taxes and subsidies and how they compare with the growth rate of the country. What we see here, the country growth rate has been recovering right from 2020, when we had a contraction of the economy of around 7.5% in 2021. And this recovery is quite positive because it shows how resilient the country has been, hence going back to the target that the country had also on the revenues. And then we have the standard tax rate to farms, except those in the special economic zones, and also the industrial buildings. From the standard corporate income tax rate of around 30%, we note that 100% of tax capital expenditure around 33% of expenditure farm works is subjected to depreciation allowance. We also have wear and tear allowance of tractors. We have city revenue permit of 0.3% and also cess for agriculture of 1% turnover. When it comes to education sector, we have indications which also apply to equipment as well as targeted innovation inputs. For the social impact of tax, what we get from the analysis is that the incentive has been on a downward trend, which is also supported with the various reforms that have been put in place, and also supporting the fact that then the country is able to dive back to a trend of expanding the tax base and also the net revenue that we are getting from taxation. When it comes to the impact of the revenues then that we get, here we look at how are we benefiting from, for instance, some of the exemptions, and even from the amount that is obtained from taxes. The combined net benefit of expenditures, particularly in social services like education, has been progressive, meaning that the poor have been able to benefit. And this can be accredited to the reforms like free basic education, primary, and also day secondary education, and enhanced capitation that goes to the vulnerable groups like the persons with disabilities who are in education, right from primary, secondary, and even in technical training institutions. For health as well, the primary healthcare provision has been progressive, meaning that the who are able to seek health services have been able to benefit, which then means as taxpayers, there is a positive impact of the revenues that the country is collecting. In terms of implications for policy from this analysis then is to enhance the national guidelines in the provision for the incentives. As we have seen, there is an observed improvement, and that will then mean if we have improved provisions in terms of guidelines and also attractiveness in investments, then the exemptions could, some of them could be replaced, particularly by the zero rating for merit goods without majorly affecting the distributional effects. Direct taxes on individual income have been progressive. The impact of VAT on consumption-based measures on inequality is marginal. Excise duties on goods and services are largely progressive. And also when it comes to public education spending, it's also progressive. For health spending, it's progressive. And three potential areas for improved targeting relate to direct cash transfers that could be benefiting those who have been left behind for a long time, and for us to have acceleration towards attainment of sustainable development goals. The exemptions and the zero-rated tax benefits for the poor has been relatively marginal, because some of the poor and vulnerable may not be maybe consuming some of the zero-rated products, and also need to have targeted interventions, particularly for tertiary education, where the low-income groups are not well represented, as we could expect. The representation is higher in primary, secondary, but then for tertiary, where skills are being developed, the low income and the poor are left behind. So that then means looking at a paradigm shift of ensuring that the low income and the vulnerable benefit from skills development, TVET, university, which then will have a long-term positive impact of the revenues that we are getting and also improve the service delivery. Thank you.
We have a representative from KRA, Ms. Lena Olum.
Glad I came. I think this is a commendable venture. You know, usually when you put out documents as government, sometimes we hope the public does not read them. But sometimes when they read them and you hear that they actually care about what you're putting out there and they're questioning it and they want to interact around that, then it's good feedback. It means that then this is information that is important. So today we were here to listen to the tax expenditure report from the National Taxpayers Association, which is built from what the National Treasury presented last year in September. And one of the things that I think has come out from Irene, and also Dr. Nsungu also said that it will be good for that to come out as frequently as possible. And I can confirm that, of course, that is something that the National Treasury has taken up seriously, because remember, the Constitution, the Public Finance Management Act requires the government to report on all tax expenditures. Tax can only be waived by law, and subsequently, when you waive tax, then you're supposed to give an account of that tax. So maybe we were just late into complying with the law, but I think that is feedback that we have taken, and we'll make sure that this comes out. I'm aware right now that they're actually working now up to the year 2021. The one for last year was up to 2020. And from around June this year, we've been working on from 2021 since the year ended in June 2022. So that, again, should be out soon. I'll comment generally on tax expenditure and on the report that we have here. And I just want to start. When Dr. Elder was presenting, she said, why do we have tax expenditures? And I wrote them down. She said it's supposed to encourage savings. It's supposed to relieve tax burdens on the vulnerable and the poor. It's supposed to induce investment. It's supposed to improve access to service, promote exports, and address externalities. For example, now the COVID pandemic. All those are noble things, right? They look like very good things. So why is tax expenditures a problem? Yeah? Why is Irene concerned? Why is the government concerned if it goes up? Why is the public concerned? Yeah? So I think, and why is the Revenue Authority concerned? Remember, my problem is I'm supposed to meet this target. So why am I concerned when there are a lot of exemptions, a lot of incentives, a lot of reliefs, right? So I think the concern for us as a country is, what is the structure of these exemptions? What is the structure of these incentives? Yeah? How do we put them in place? Are they achieving the objectives that they're supposed to? Yeah? Is the Mwananchi seeing, when you hear that we have given exemption for this sector, we have zero-rated bread, we have zero-rated flour, are you feeling it down there where you are? And if you're not feeling it, why are you not feeling it, right? So that is where then now I think this conversation is, why this conversation is important. And so I was just looking at it from the core values of the National Taxpayers Association. Very good core values, Irene. So I'll just pick a few of them and relate them to what we need our tax expenditure to be like. The first thing is accountability. As a country, there's need for accountability on tax expenditure. We need to know when we give exemptions, who are we giving them to? Is it the right person? Yeah? Is that the right way to support that sector? Yeah? Do they need a tax exemption, or does the government need to find another way of supporting them? One of the areas that Dr. Nsungu has said that we can improve on is on access to health, right? Is taxes the way to do that? Is there another way we can do that, right? And if we give them, who is checking to make sure that they've achieved their objective? Are we measuring them? So that next time when we go back to Parliament and we're asking for something else and we are asked, so we gave this last year or we gave this 5 years ago, where have we gotten there? Did it achieve what it was supposed to achieve? So accountability is very important in this space. Yeah? Another thing I saw here is transparency. Are you aware, yeah, of these tax expenditures as Kenyans? As government, we know them. As KRA, we know them. Corporates, I can guarantee you know them because that is what they use, right, to plan their business. So even you as a Kenyan, it is important for you to know it. And transparency comes from forums like this. When you participate in forums like this, and you ask the questions that I've had Kwe you ask, that the lady at the back there has asked, those are important questions, yeah? Because what we are trying to build here is transparency, so that one day we don't just come out and say, there was this business that came here and did a lot of business, made a lot of money, had tax planning, got a lot of incentives and closed up and went, and Kenyans didn't see anything. So transparency is also a big thing in tax expenditure. The last thing, participation, right? This is where all of us come in. Yeah, we might argue that we may not have the ability to do the reports and ask the questions, but participation. How do we participate? Stakeholder engagement is important, and I'm glad that there are representatives for various organizations here. I've heard of TVETs, that NTA is working with the community, so that's where stakeholder engagement comes in. As KRA, the National Treasury, again, stakeholder engagement in everything that we do is important. Remember, there is the Public Participation Act, I think, that requires us to consult on each and every policy measure, right? So, for example, the National Treasury put out a call for budget proposals. I hope you saw it, yeah? So going into the fiscal cycle of 2023-2024, some of these incentives, remember, they are in the law. Tax is only being waived by law. So which means next year you will see measures that the government is putting in place. Are you being heard? When you have a problem with some of these things, are you putting them out there? Where you think that maybe some of the measures that have been given are not suitable or are not enough, are you putting in your proposals, yeah, on how the government can improve, how the government can make sure that they are checked, so that if we give exemptions, we are not just giving exemptions and we don't know how they are being applied. So public participation is important. I'm very impressed with the working with the TVETs. I know KRA, one of the things we have learned is that you have to raise tax awareness at an early stage. When you come at a late stage, it's too late. Yeah, because people the age of my parents, they've worked all their life, they're tired, they've taken loans, they've struggled. Yeah, and not knowing that they should be getting support from the government and not struggling as much as they're doing. So their tax morale is very low. But now, if you start it at an early age, the age that I'm seeing here, when we're getting in and we're writing our age, I was telling them, this is the only place I've been asked to write my age, and I will not. Because the ages I saw there, they were quite young. So when we go there, so by the time you're in high school, you already know about taxes. By the time you're in campus, you know about taxes. By the time you're getting to the job market, you're asking questions, right? You're concerned. This is not something that you just see career reporting targets. Irene on the streets complaining about, how is our money being used? The Auditor General saying that money has been embezzled, yeah? So those are not foreign reports to us, yeah? So that, I think, is what is important for us to look at. So I think as a country, we need to be clear on tax expenditures. And I think it begins with planning. Yeah, what is the government agenda? When the government is putting tax expenditure, what are they trying to achieve? Do we know what the government agenda is? And the importance of a government agenda is because then we deal with issues like lobbying that she mentioned. Yeah, corporates lobby a lot. So how do we curb that? So that even if someone is coming and asking for an incentive or an exemption, we have a plan and we say that this is what we want as a country, this is what we have planned. Is what you're asking for aligned to that? Or is it something then that you should consider in another period, in another season? Yeah? And I think one of the advances we've made in that direction is the national tax policy, which again the National Treasury undertook. And I know comments were asked. I'm hoping we gave comments. Yeah? So that should be out soon. So that national tax policy then will guide the government, not just on what taxes it wants to collect, on what sectors it wants to promote and how it wants to promote those sectors. So once we have a policy, what is the next thing? Benchmark. I talked about when we are saying we go through the tax expenditure route or the tax incentive route. Is that the best way to go, right? So benchmark with other countries. I think you asked that question, and I remember it's one of the questions you were asking Dr. Nsunga, and you said you'll pick it up later. That is an important question. Can we benchmark on these tax expenditures? The next thing, what is the extent of the exemption, right? Sometimes you see some, and even as government, you're like, okay, maybe that was a bit too far, or maybe that is not enough. Yeah, are they measurable? Yeah, should they be for a specific time? Should we cut them so that we say we are giving this for the next 3 years because of this sector? Then in 3 years, can we revisit and go to these people and say we gave you this incentive, yeah, and you promised that if we give you this incentive, you're going to create employment. We are going to see more people. You're going to have more schools. Healthcare is going to improve. Has that happened? Yeah. And I keep saying this goes back to the public. So the public should be aware this is what the government has given this sector. And then ask the government, we have not seen this, so what happened, right? So what is the extent of the tax expenditure? How are you measuring them? Then information available to the public. Again, you're not able to ask these questions if you're not aware of what has been given. So I think as a government, the call to us is that let us make this information public. What have we given to manufacturers? What have we given to the health sector? What have we given to the sports sector? So that then you can measure and see, okay, Because of this, then we are able to do this. So at least I'm seeing what has happened. So that information has to be public, and I think that's why the National Treasury is publicizing these reports. And then decisions made on performance. So once we have evaluated that these are the tax expenditures we have, this is what they have achieved, this is what they've not achieved, let's get rid of this, let's continue this, let's improve this, right? Accountability, I still want to insist on accountability. I think one of the things that I need to mention for KRA, we administer a lot of these tax expenditures, sometimes begrudgingly, especially when we are not meeting our target, but it is important for us so that even if I am going to report that I didn't meet my target, but it's because of this and this and this, I can tell the government, yes, you give this expenditure, but we actually confirmed that they're doing what they do. So just to mention a few of the things we do, you saw some of the expenditures listed here include deductions, investment deductions. These are given to companies that are setting up business. So if you acquire plant and machinery, you construct a factory and things like that, you're given a deduction, right? So before you enjoy that deduction, KRA is supposed to confirm that you've actually incurred that expenditure, right? So that way we make sure that it is not abused. For exemption, VAT exemptions, there are a lot of official aid-funded projects where the government partners with an international institution or another government to do certain projects that are in the public interest. Again, KRA is mandated to ensure that those projects actually take place, and the exemptions that are given are accounted for by the specific project owners, right? So that is usually done. Another thing we do is preferential tax rates. Again, those ones were listed. There are certain sectors like motor vehicle assembly. The government is trying to encourage us to assemble our own vehicles locally instead of importing the 8-year-old and the old vehicles. Again, environment being something that we're supposed to look at. We have the special economic zones. I think it has been raised here. The export processing zones. Of course, the quality of employment there has been a conversation that has been had in the country. So all those preferential tax rates, they are conditions. They are not blanket rates you get just because of this. So again, before you grant that incentive, we are required to do checks to ensure that they have met the conditions that the policy makers have put in the law. So just to end, I think mine is just to pledge KRA support to the National Taxpayers Association. I think us being here means that we are very interested in working with you and hearing you as a way of ensuring that we improve on tax administration. I'm glad that you've moved just from the expenditure side and now you've come to this other side. How can we make sure that there is enough to spend on the other side? So we look forward to working with you, and just a call to all of us. The answers are not with one person. They're not with Treasury, they're not with Parliament, they're not with KRA. We all have our own agendas. So it's only by working together and listening to each other that we can incorporate every person's concerns and interests and come up with policies that work for all of us. Thank you so much.
Thank you very much, Ms. Olum. I think everyone of us who's here and anyone who's spoken, they're agreeing that it's true, pesa zetu ni haki yetu, right? So moving on swiftly, I would like to invite a representative from Institute of Public Finance, who is Veronocah.
So I think as far as it's a good step that now we currently have numbers on tax expenditures, it is even more important for us to look at them and see, are they achieving the intended goals? So is the VAT exemption promoting consumption as we intend? And if the answer is no, then we need to justify why we need that exemption to still be there. I'm forgetting her name, the representative from KRA mentioned about the national tax policy. It's a good document, and it talks about rationalizing tax exemptions. I'm not sure what that means on the part of government, but we would want to see if government is foregoing revenue at the expense of something like social spending, then there has to be a clear policy goal, and it must be justifiable. So the government must be accruing more benefits than the cost, then the obvious cost being the revenue foregone. So why should the government forego tax revenue by not taxing a corporation, and as a result foregoing social spending? So why should I not tax that corporation so that I increase my social spending, for example. So these policy goals are very important in the design of tax expenditures, and I think that's where the biggest gap is. We see them coming in a lot, but we do not see any report saying we forgo 2% of GDP in revenue, but what was the impact on the economy? Were we able to attract more FDI? Were we able to have more companies investing outside of Nairobi, the case of investment deductions? So these are the things that even us as people outside of government, these are some of the questions we should be asking. Another interesting document that is coming up from the government is the medium-term revenue strategy. I think there will be 2 before 2030. So we would want to see how that then will feed into tax expenditures. And I think there is a mention of it in the BROP, the 2022 BROP. So it will be of interest for us to look out for that and see how some of these issues will be addressed. And then we have, I am seeing some core values here from NTA, and I'll speak to some of them that us as IPF, we are also keen on looking at. The first one is the question of equity that really touches on the income distribution impact of tax policy. So are we using the tax policy to promote equity? So the example I gave, not taxing or giving a corporation an exemption at the expense of social spending. Are we promoting equity, or are we making our society less equitable? Then efficiency. We need revenue to support government spending. So are we collecting as much revenue as we would want, or we are foregoing too much revenue in terms of tax exemptions? And in terms of equity, there are 2 taxes that have been coming up a lot, and I think it's also something we are looking at. There's the issue of wealth taxes that has come out a lot. So what is the potential of taxing the very rich in the country, taxing their net worth, so that then the government can grow its revenue? The other thing that really touches on OSR is property taxation. But then the challenge here is these 2 taxes touch on the elite in our society. So they have the political will to influence the kind of policy that government will adopt. So what is our role as citizens to support such progressive taxes? Wealth tax and property taxes are some of the most progressive taxes because they tax the net worth of a person, and so they do not affect consumption, they do not affect investment. So why has the government not actually tapped into the potential of these taxes? But then how do we influence the political circles? Because them that are making the policy are the same people we are targeting to tax. So they have the political will, or how can we make them have the political will to implement some of these new taxation measures that then will support socio-economic development? I think those will be my few remarks on the same, and I appreciate being part of this conversation. Thank you.
Thank you very much. Okay, welcome, Madam Veronocah. We need the moment to be very picturesque, so just pause, let the camera people find the right angle, the right lighting. I understand they have to do some ISO adjustment, f-stop, shutter speed, and all those. So let's just soyez patient. That is lawyer for the patients. Thank you very much. Let's give them a round of applause as they do their bidding. So it's official. The tax expenditure report launched by NTA has been done. We can just take more photos, please. Now Now we do the ribbon cutting. Let's close in. I think she can come. Yes, sorry. A round of applause, please. Good round of applause. Thank you very much. With your direction, the people behind the lenses, you might just kindly direct us on how you want them posing for a nice final photo.
Finance, tumekuja kuangazia ripoti ambayo serikali ilitoa. Kenya, the National Treasury ilitoa ripoti ambayo inaangazia ile tunaita tax expenditure. Hii inamaanisha kuwa kuna ile ushuru ambao serikali haikusanyi kwa sababu inapatia wananchi na wakati mingi inapatia pia makampuni fursa ya kulipa ushuru ya kiwango ya chini kidogo, au inawapatia miaka kadhaa ambao hawalipi kwanza waendeshe biashara yao. Lakini ile ripoti ya Treasury inajaribu kueleza ni kiwango ngapi ya ushuru serikali letu haikusanyi. Na leo tulikuwa tunaiangazia tujiulize kuwa hii ushuru ambao haikusanywi ni ushuru ambao tu watu wenye makampuni makubwa ndio wanapata hiyo tax expenditure, ama pia kuna ile tax expenditure ambayo mlipa ushuru wa kawaida anapewa. Kwa hivyo ile ripoti ambayo tumetoa leo inaonyesha kuwa ni muhimu serikali ipatiane details zaidi kuhusu ile tax expenditure. Ni pesa ngapi hasa wananchi na nchi yetu ya Kenya haikusanyi kutokana na ile tax expenditure. Na tunaiona kama nchi, tunaona umuhimu ama ni rahisi kuona the results ya hiyo ushuru ambao tunasema kuwa hatujaikusanya ili tulete foreign direct investment. Kwa hivyo leo tumekuja tu kuzidi kueleza serikali kuwa ni vyema wametoa ile ripoti, lakini tunataka ile ripoti toke kila mwaka na ikuwe na details zaidi kuonyesha kama ile ushuru hatujaikusanya basi na sisi tunaona development ama investment ambayo inafuatilia. Jambo la pili pia tunaangazia kuambia serikali kuwa hata wanapopatiana hii tax expenditure tuangazie pia makampuni ambayo si ile multinationals pia inapata. Zaidi ya hiyo pia tungependa kuambia ile kamati ya bunge National Finance Planning ambao wanapass ile Finance Act kila mwaka, pia kabla wapitishe ile Finance Act wazungumze na serikali, wapewe pia hii report ya tax expenditure ikiwa na more details, ndio waweze kujua kuwa tuendelee kupatiana zile tax expenditure ama tuache. Lakini zaidi ya hiyo tu kueleza serikali yetu pia kuwa wananchi wamekuwa wakilipa ushuru na ni vizuri zaidi tuone huduma za afya, huduma za elimu, barabara, masoko yakiendelea kuwa vizuri, ndiposa nao wananchi wazidi kutoa ushuru bila kufuatiliwa sana. Asanteni.